All right, so just this year alone, in 2023, mortgage rates have already increased north of 2 full percentage points. So we're knocking on the door of Halloween this coming week. And this rise in interest rates, the fact that mortgage interest rates, 30-year fixed rates last week were north of 8% for the first time since 2006, has created a lot of fear. It's scaring a lot of first-time homebuyers, a lot of homebuyers and sellers. And so I can't wait today to share with you a behind-the-scenes conversation that I'm having with every single client right now and every single realtor I get the opportunity to talk with. So first off, I want to welcome you back to another episode of Making Sense of Your Market. I've been hosting these videos, these little segments since 2016, and I'm not going to stop. I'm going to continue doing this throughout this market and quite possibly until I retire one day. The reason why I do this, and I call it Making Sense of Your Market, is if you don't have one, the right perspective, two, the right info, there could be a lot of fear. There could be a lot of paralysis in this market. What I'm doing with data, what I'm doing with information that I've had, wisdom, experience, and knowledge that I get from very, very smart people, is I'm helping my clients better navigate through the fog right now. That lighthouse, right? I'm going to be a lighthouse right now for people that can't see beyond right now. So the conversation I have with all my clients, I like to always go back, okay? We start in the past, where rates were, what the market did when they were lower, what rates have done leading up to now, our current reality, and then where rates are at right now, what the market's doing right now, and then with that information, past, present, how that is going to impact future. Here's what I can tell you, and this comes from an article and a statistic that I read this week. For every 1% drop in interest rates, it's going to present 5 million new home buyers an opportunity to buy real estate in America. Think of that, okay? So we already have home values continuing to hold steady or go up despite high interest rates. If interest rates drop 1 full percentage points, what do you think that's gonna do to the market? It's gonna cause the market to continue to go up in value. So, past, present, future, here's our strategy. If you take today's current market, real estate market, where you're actually able to negotiate a slight seller credit to prepay some interest, leveraging a temporary buy down, whether it's a 3-2-1 or a 2-1 or a 1-1 buy down, you can lower the interest that you're paying on a mortgage for the first year or two, okay? But the big point here is you're able to lock in today's home values. Now, let's fast forward. Interest rates drop a full percentage point 12 to 18 months from now, and home values go up 5, 7, 10%. You've locked in today's value, you reap the benefits of that appreciation, and then at that time you can go and rework that mortgage through a refinance. So that's huge. I gave an Instagram post, or I shared an Instagram post that I gave to a client the other day, and I gave them the opportunity to pick their option. I ran numbers, and their particular scenario was right around an $800,000 purchase. If they bought now with higher interest rates compared to where interest rates might be a year or two from now, they would pay about $20,000 more interest than waiting a year or two to buy. But here's the exchange. Buying a year or two from now would result in about $80,000 to $90,000 increase in that purchase price. So, would you rather finance $80,000 more in real estate, or would you rather pay $20,000 more in interest? I mean, I know what I would say. I would say the $20,000 in interest. Plus, if we can get the seller to help out with that, it might even be less. So being armed with the right information and having the right strategy in this market is more important than ever. I love my job as a mortgage advisor right now more than I've ever loved it, because of the advice I'm able to give, because of the information that I have access to, and because of me being able to sit down and arm my clients with information that's going to put them in a better financial position down the road. So one last thing. I got to do a survey this last week of 30-year fixed rates. So every time I make these episodes, I like to talk about where interest rates are. 30-year fixed rates right now are right under 8%. We're right at about 7.875%. I want everyone to know that at New American Funding with Dan Keller, you're getting a competitive interest rate. So what I did is I went out through Freddie Mac and through Mortgage News Daily. Guess what? They've surveyed 300 of the top lenders in America, and And the average 30-year fixed rate this week, 7.875%. So it's high. It is what it is. We can't do anything about it, but we can take advantage of an opportunity despite high interest rates right now, and that's up to you. If you have any questions, I want you to reach out to me. I'd love for you to share this information. Let's get this information out like it should be on the nightly news, and it's not, and help me by getting this in the hands of the right people. I'll see you next week for another update. Have a great weekend and happy Halloween.